Good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening as we're on Wednesday, the 28th of August, 2024, and it's 6:10 p.m. Central Time. So let's talk. We had data come out today, and maybe we should go and see first what we get tomorrow, and then I'll show you the data that came out today that moving the market after hours. So let's go to that first. Tomorrow you're going to get your second look at the second quarter GDP, the final number. They're looking for it unchanged at 2.8% from the first advanced look. Jobless claims due out at 7:30. They're looking for about 230,000. National Association of Realtors pending home sales, they think it'll be up about a percentage point. Energy analysts are looking for an injection of natural gas tomorrow at the 44 billion cubic feet, and that's pretty much in line with the norm at this time of the year. But Nvidia's earnings came out, and if you just take a look at this, and you can always hit pause and read what it is, you got a $50 billion buyback of stock. Blackwell, their new chip, samples have been sent out, fourth quarter, full shipment, and they expect normal going on in 2025. The suppliers are not in shortage. I heard after the call market and an interview with Jason, the CEO today. When you look at non-reoccurring items, they took them up to 68 cents from 61, but they beat the FactSet consensus of 65 cents. Net income jumped 16.6 billion or 67 cents a share. These are good numbers. Here's the problem. When you want something that is so blowout, just so blowout, that you can't reach it no matter what, you get a reaction. So when these first came out, I'm watching the stock jump up and down. And then later, as the market decided to digest it, the market dropped. And at one point, it was down 7 or 8% in the aftermarket. So you add that on to the about 2% loss it had during the day, and you got down to about an 8 to 10% reduction. And that's what the option traders thought, up or down about 10%. And that's right in line with what the stock normally does on a quarterly report. Salesforce beat, and at first the stock was up in the aftermarket, and then the CEO talked about the issue that they had with Microsoft, and he dropped the stock. All you have to do is shut up and say, we are looking at it, we're working with Microsoft, and we'll have more to say later. That's it. Instead, he went into it, sounded defensive, and they took the stock down on him. CrowdStrike beat, let me say this right. Salesforce beat and the stock was up. It's CrowdStrike that did that. And in the aftermarket, they were up and then down. So I apologize to Salesforce. They came out and had a very, very good quarter. CrowdStrike was okay, too. And they're getting this behind them, and they are taking $30 million hits for a couple of quarters here. And I told you that would have to be to make things right with the subscribers. So no surprise, still a good company. Sorry that I screwed up on which one was which. I do this from memory. I'm not reading a teleprompter here or anything. So in the evening market, you're getting the NASDAQ down because you're down in CrowdStrike and you're down in Nvidia. The Russell's down a fraction. I don't think that's much of a matter. And the S&P backing off. Now, the gold was up and most metals tonight are down. We're looking at currencies. They were down hard against the dollar today. You're back down in the Brent to 78.5, and interest rates are going to now be looking and turning their attention instantly to the PCE index number that comes out on Friday morning. When you and I take a look at the weekly close of the S&P, is this a double top? Well, so far on a closing basis, yes. When we take a look at the chart action, got to be careful right here. As I told you, you could make an argument that you've got a shoulder, another shoulder, could be an inverted head and shoulder formation, but you have to clear this high, not these. You got to get over the left shoulder now to say that that's the pattern. What's really going on in the current chart is you had consolidation and the market's breaking out to the downside, led in large part because of the weighting of Nvidia, and it did drop, as I've said. The pattern on the chart is a higher high and a lower low. I think I've got that wrong. I think it's lower highs, lower lows. I didn't catch this one up. That is wrong. It's two red pointing down. So you've turned the trend back down. I did it right here. It might be going back to the 55 level, wouldn't surprise me at all. And remember, you're entering September. What is September? It's notorious to be the worst month of the year for stocks. What else is September? Seasonally speaking, if you go back the past 15 years, the S&P futures, the September, between late August, mid-September, has risen. So it's an interesting play, and then market often comes back down. We'll see if that holds up. Now, are you losing the embedded reading? Any close tomorrow under 79, you'll lose that reading. So what this market needs to do is come back from whatever low it makes tonight and close in the top part of tomorrow's range. Otherwise, you probably lose the bullishness and you head back down. When you lose that, then often the goal of the 18-day average comes into play. In the NASDAQ, when you lost the embedded reading, let me get over here for you. There we are. Now, there's Tuesday. Here you are Wednesday. You lost this reading on the close today. You had a 73 reading. Traders should have come out because the odds favor at a minimum you should get back to 19,164, which is just over the 100-day average. And bingo. Agreed? That's what should happen, and that's what did happen. Now the market's in balance, as I call it. It's still bullish. It's still over those averages, but it owed that on the downside. It's left with an overbought condition that it has to work off. In the Dow Jones, you've kept the bullish embedded reading, so the pullbacks so far aren't really problematic. You had an outside day down. You know you're getting a stronger market, in my opinion, if you take out the highs of today, Wednesday, by getting up over that high. Then you open the door up for the upper band. If you don't take that out, and if you lose the embedded reading, if that occurs, then the 18-day average becomes in play. And in the Russell, you never did embed. The market's just drifting. Momentum is turning down. You peaked out at the upper Bollinger Band, and you hear me often say that first challenge of a Bollinger Band, especially if the bands are wide. When they're narrow like this, it's not reliable. It's much more reliable on wide bands. What you had, it often is a spot that pros start dumping, if you will, a lot of their positions. I didn't say going short. I said dumping longs. In the 10-year note, should the market get under 113.08, could be a problem in this. That would open you up for possibly getting to the lower Bollinger Band. Right now, you've got a pattern of higher highs but lower lows. If you're going to get friendly the market, I think you got to take out earlier in the week high, not just today's high. So I'd be watching that. 5-year note is very similar in pattern. They are both still bullish. Both this and the 10-year have supported the 18-day average of closes. You still have the bearish embedded reading in the dollar. So the short covering's coming in. If you get my morning subscriber video, I showed the weekly chart. And I showed traders as you were breaking down here, and I kept saying, look at the weekly chart. You're too far under the Bollinger Band to want to be a seller on that break. And that is exactly what happened. Now it's spinning up. If you lose the embedded reading by a closing over 21, wherever the 18-day averages might come into play. But the first thing that I think will happen is the pros are going to sell the rally tomorrow. And there's a certain number that they do that I'll discuss in my morning subscriber video. If you've taken my charting course, you already know that number. In the euro, you lost the bullish embedded reading. So losing that reading, did you lose it on the close, though? Let me come over there. No. Intraday doesn't mean diddly. You can lose it and come back. It's flirting with the idea that it wants to pull down and possibly get here if that stays lost. But as I said, intraday doesn't mean a lot. The fact that this lost it meant that the dollar on a rally stands a good chance of also losing its bearish reading. In the British pound, you're still bullish. You have the embedded reading, a further break in the market. I think the pros will buy again, maybe back into this area here between 130.80, 131 and a quarter probably. But you got to keep the embedded reading going there. In Bitcoin, it just doesn't want to get up and go. It's really that simple. And I'm sure that everybody that owns Bitcoin and that owns, excuse me, Ethereum want to see bye-bye to Mr. Gensler, but I don't think he's going anywhere unless he gets replaced. He's anti this. We know it. We know his reasons for it. He's entitled to his opinion. When you got up to the 100-day average in the Bollinger Band, the market opened the door for traders to come out. I said it to you here. Go look at the videos. And now you're back to a zone that doesn't mean anything to me. You have a pattern of a lower low and a higher high, and you did not hold the 18-day average on the first challenge. Number 3 in that parade, you were overbought this whole time, never did embed. Embedding's very important. On the energy market, I just see one of these waves of up and down like that. It's not possible for me to call a trend in these markets. The same thing in WTI. I see these waves back and forth. Not fun. Gasoline still in a downtrend, so the Biden administration has taken their victory lap. They're already telling you, look at the price of Labor Day gasoline to the past 2-3 years, and you will be happy. And they are correct. They're not incorrect. Last in natural gas, you got down to the lower Bollinger Band today. First challenge, not embedded. In unison, what do? If you're bearish, that is your short cover area, and you walk away from the market. I cover this and a heck of a lot more if you get our trading indicators. Now, let me explain it. We put 2 guides together with our good friends from the old Futures magazine and Modern Trader. And it covers chart patterns, the flows of charts, moving averages. You're going to get how to work with trend lines, ways to draw them, what the pros look like. These are all PDFs, by the way. One of my favorite tools are moving averages and, as you can see, the slow stochastic oscillator. But there's RSI, it's discussed, MACD, market sentiment. And what about cycle trades? A lot of people believe in cycles. I certainly took courses in them. Used to teach cycles, by the way. But I gave up on them. I found that other things worked better for me. The Arun indicator, price-time relationship, options, so many traders trade them. You want to keep up with that. Money management, it's real important. Stop orders, think of that. How do you get this? Go to iraepstein.com. On the top left, free offers, or move your cursor to the top. Up here, you'll see an icon. Give it a click, and away you go. I'm Ira Epstein. I'll catch up with you all in the morning. Have a great evening.